Welcome back. In this lesson, we're looking at AI use cases in finance. AI/machine learning educational explainer. Now let's look at introduction. Artificial intelligence is becoming a major force in the finance industry. Banks, insurers, payment companies, fintechs, investment firms, and corporate finance teams are using AI to improve decisions and automate work. Finance is a data-rich industry, so AI can learn from transactions, customer behavior, market signals, documents, and risk events. AI in finance is not only about chatbots or automation. It also includes predictive models, grounded knowledge systems, and AI agents that can coordinate complex workflows. In this video, we will understand AI use cases in finance through a simple 3-bucket framework. Now let's look at what this video covers. We will first understand why AI matters in finance. Then we will look at current AI trends shaping the financial services industry. After that, we will group finance AI use cases into 3 buckets. The first bucket is AI and machine learning for prediction. The second bucket is RAG, or Retrieval Augmented Generation, for grounded answers. The third bucket is agents for orchestrated work. Finally, we will go through one slide on each major finance use case and end with a practical recap. Now let's look at current trends in finance AI. Several important trends are shaping AI adoption in finance. Financial institutions are using AI for fraud detection, customer experience, risk modeling, compliance, and operational efficiency. Generative AI is being used for research, document summarization, customer support, coding, and knowledge assistance. Agentic AI is becoming important because finance has many multi-step workflows that involve documents, approvals, checks, and system updates. Fraud and cyber risks are also increasing because criminals can use AI to create convincing scams and automated attacks. Governance, model risk management, explainability, privacy, and human oversight are becoming central to finance AI programs. Now let's look at 3 buckets of finance AI use cases. A simple way to understand AI in finance is to divide use cases into 3 buckets. Bucket 1 is AI and machine learning for prediction. These use cases predict fraud, credit risk, market risk, liquidity needs, churn, and customer behavior. Bucket 2 is RAG for grounded answers. These use cases use trusted documents, policies, regulations, research reports, and product knowledge to generate source-based answers. Bucket 3 is agents for orchestrated work. These use cases coordinate tasks across people, systems, documents, checks, approvals, and follow-up actions. Now let's look at use case 1, fraud detection and transaction anomaly prediction. Fraud detection is one of the most important AI use cases in finance. Machine learning models can analyze millions of transactions and learn what normal and suspicious behavior looks like. They can detect unusual spending patterns, suspicious login behavior, account takeover attempts, and abnormal payment activity. The benefit is that AI can identify fraud signals faster than manual review alone. It can also reduce false positives by learning from past investigation outcomes. This helps protect customers, reduce financial loss, and improve trust in digital finance. Now let's look at use case 2, credit risk scoring and loan default prediction. Credit risk prediction helps lenders understand the likelihood that a borrower may repay or default. AI models can analyze credit history, income data, repayment behavior, transaction patterns, employment signals, and other approved risk factors. This can support loan underwriting, credit card limit decisions, mortgage assessment, and small business lending. The goal is not only faster decisions, but also more consistent risk assessment. Responsible design is very important because credit decisions must be fair, explainable, compliant, and carefully governed. AI should support credit teams, not become an uncontrolled black box. Now let's look at use case 3, market risk, liquidity, and forecasting. Finance teams also use AI for forecasting and risk management. Models can analyze market prices, interest rates, volatility, cash flows, payment behavior, and macroeconomic indicators. This can help forecast market risk, liquidity needs, cash demand, portfolio exposure, and stress scenarios. Banks and investment firms can use these predictions to prepare for uncertainty. Corporate finance teams can use AI to improve treasury planning and working capital decisions. The value comes from better visibility into possible future risks before they become urgent problems. Now let's look at use case 4, customer churn, personalization, and next best action. AI can help financial institutions understand customer behavior more deeply. Models can predict which customers may leave, which customers may need support, and which products may be relevant. This enables personalized offers, better financial guidance, timely reminders, and improved customer retention. A bank may identify a customer likely to switch and offer a more suitable product or service. A wealth platform may suggest education content or portfolio review based on customer needs. The goal is to make financial services more relevant, timely, and customer-centered. Now let's look at use case 5 RAG for regulatory and compliance knowledge. Now let us move to the second bucket, RAG for grounded answers. Finance is a highly regulated industry with large volumes of rules, policies, circulars, audit requirements, and internal controls. A RAG assistant can retrieve relevant regulations, policies, and compliance documents before generating an answer. This helps compliance teams, risk teams, auditors, and business users find reliable information faster. The answer can include references to the source document, which improves traceability. This is especially useful when employees need accurate answers but do not have time to search across many documents. Now let's look at use case 6 RAG for research, investment analysis, and advisor support. RAG can also support investment research and financial advisory work. Analysts and advisors often review earnings reports, market commentary, fund documents, product notes, client profiles, and risk disclosures. A RAG assistant can retrieve relevant information and create grounded summaries or comparison notes. It can help answer questions such as what changed in a company's latest results or what risks are mentioned in a fund document. For wealth managers, it can support advisor preparation before client meetings. The key point is that the answer should be grounded in approved and retrievable sources, not guessed. Now let's look at use case 7 RAG for internal policy, product, and operations support. Financial institutions have thousands of internal documents. These include product manuals, process SOPs, call center scripts, onboarding guides, system procedures, legal templates, and operating policies. A RAG assistant can help employees quickly find the right answer from approved internal knowledge. This is useful for branch staff, contact center teams, operations teams, relationship managers, and back-office users. It reduces dependency on informal knowledge and repeated escalations. It also improves consistency because people are guided by the same approved source material. Now let's look at use case 8 agents for KYC, AML, and financial crime investigation. The third bucket is agents for orchestrated work. A major finance use case is KYC, machine learning, and financial crime investigation. An AI agent can collect customer information, screen names, review alerts, summarize transaction history, retrieve policies, and prepare an investigation summary. It can also route cases to analysts and track pending actions. This does not remove the need for human judgment in sensitive decisions. But it can reduce repetitive work and help investigators focus on higher-risk cases. Now let's look at use case 9 agents for loan origination and credit processing. Loan origination is a multi-step workflow, which makes it suitable for agentic AI. An AI agent can collect application data, check document completeness, extract information, request missing items, run eligibility checks, and prepare a case summary. It can coordinate between the customer, relationship manager, credit team, and operations team. This can reduce turnaround time and improve customer experience. The agent should work within defined approval rules and human review checkpoints. In finance, speed matters, but control and compliance matter even more. Now let's look at use case 10 agents for customer service, payments, and dispute resolution. AI agents can also support customer service and payment operations. A customer may ask about a failed payment, card dispute, refund, chargeback, account issue, or transaction status. An AI agent can understand the request, retrieve account and transaction context, check policy rules, draft a response, create a service case, and route it to the right team. It can also follow up when additional information is needed. This improves service speed and reduces manual handoffs. For customers, the benefit is faster and clearer resolution. Now let's look at use case 11 agents for reconciliation, financial close, and operations. Finance operations involve many repetitive and rules-driven tasks. AI agents can support reconciliation, exception handling, invoice matching, journal preparation, variance explanation, and period-end close activities. They can collect data from multiple systems, identify mismatches, suggest reasons, and prepare summaries for human review. This is useful for banks, insurers, fintechs, and corporate finance departments. The agent does not need to make every final decision. Its value is in coordinating the work, reducing manual effort, and making exceptions easier to resolve. Now let's look at final recap and closing. Let us recap the main idea. AI use cases in finance can be grouped into 3 practical buckets. AI and machine learning for prediction help detect fraud, predict credit risk, forecast markets, and understand customer behavior. RAG helps financial teams get grounded answers from trusted regulations, policies, research, and internal documents. Agents help orchestrate complex workflows such as KYC, loan processing, customer service, payments, disputes, reconciliation, and financial close. Together, these use cases show how AI can improve risk management, customer experience, compliance, productivity, and decision-making in finance. To wrap up, here is the key takeaway. You now have a structured overview of AI use cases in finance. Review the core ideas, connect them to examples, and revisit concepts like introduction, what this video covers, current trends in finance AI when practicing. If you can explain the idea in your own words, you have really understood it.